Hello and welcome to today's video. My name is Doyal and today we are going to see how to do the bank reconciliation statement. So what is a bank reconciliation statement? Why do we even need one? Now, when you go and open your bank account, whether it is a savings account or a current account, the bank gives you a passbook. Companies maintain in their books of account a bank account. Okay, in the cash book, we studied the double column cash book in which we had both the cash column and the bank column. So in the company's books, the bank account is maintained and we record whatever transactions we know. And the bank also at the same time maintains an account in the name of the company. For its accounts also it needs to know, right? So the bank account of the customer is kept with the bank, and we, the entity, the company, even we record our banking transactions in the cash book. Now what happens most times is there can be certain differences. Now at the end of my month, say at the end of 31st March, in my cash book, as per my transactions and my knowledge, I have certain balance, and in my passbook I see that my balance is something else. Now both are different. So that means there is some discrepancy. There is some difference. Now I need to find out the difference, right? Where has my balance gone wrong? I need to find out. So to find that out, I prepare a statement called the bank reconciliation statement. The bank reconciliation statement is a statement which is prepared by the account holder to reconcile the differences between the passbook and the cash book. Bank reconciliation statement is prepared by the account holder to reconcile the differences between the passbook and the cash book. Let's see. This is an example of a passbook and a cash book. Here we can see that there are certain balances. There are certain withdrawals, deposits, and the balances. And at the end we have a credit balance of 24,300. But see in my cash book, look in the cash book. Feb 1st, the balance brought down is 23,700. That means there is some difference between my passbook balance and my cash book balance. Now, how do I know what items are causing the difference? So, as you can see all these marks here, I have ticked all the transactions that have been recorded both in the passbook as well as the cash book. One more concept before we go into this is one more concept before we look more into detail. One more concept before we look into detail. One more concept before we look at the passbook in detail. We know that in our bank books and in our cash book, the debit balance, we know in our accounts that a debit balance means that cash is coming in. It is a positive sign. However, in our passbook, in our banking books, it is the reverse. The bank will credit money into your account. So whenever the word credit is used with respect to a passbook, it means money is coming into the bank. This is the exact opposite of our cash book. Similarly, in our cash book, whenever we are paying any expense, we are crediting the amount. But in our passbook, in the bank statement, all expenses are debited. So keep this difference in your head. So in my passbook, credit means positive and debit means negative. In my cash book, debit means positive and credit means negative. See? Remember, your cash book debit balance is positive. That means money is coming in. And in our passbook, credit balance is positive, which means money is coming in. Similarly, cash going out in my cash book will be a credit balance, which is negative. And in my passbook, cash going out will be debited. So the cash book and the passbook are opposites. Okay, so now let's look at the possible differences that could be between the passbook and the cash book. Let's identify all those transactions that are there in the passbook but not in the cash book, and vice versa. Okay, so our first transaction on Jan 2nd, cash has been deposited worth 40,000. Okay, here also cash is there. So wherever there's a tick mark over here, that means that transaction is in both the books, in the passbook as well as the cash book. So we have 40,000 here. Okay, next to furniture dealers on January 4th, we paid 6,000. Okay, Jan 2nd, 6,000. Tick, it's there. To Das and Company, we have paid. Das and Company 12,500, 12,500. Johnson's and Company's check has been credited on 10th January. But here on 8th January, it has been credited. Okay, since it's still within the month, so it does not, it's not a problem. On January 12th, to Roy and James, withdrawal of 10,000. Roy and James, 10,000. By B. Babu and Company's check, 7,600 has been credited. So you can see there is a delay here. Babu and Company's check on January 15th, 7,600 credited. But on January 10th, Babu and Company's check has been recorded. So you can see the lag. This means that we must have received the check on January 10th itself. But banks take time to, when checks are deposited with a bank, there is a certain time, in which the check has to get cleared. We have to get clearance from the other bank. So you can clearly see that it has taken 5 days to reflect in our passbook. But still, as it's within the month, no problem. On January 16th, cash of 3,000 has been deposited. Okay. Jan 16, 3,000. Yeah, Jan 16, 3,000. Deposit. Jan 20th, 5,000 rupees have been withdrawn. Jan 20th, 5,000 rupees withdrawn. Then we have by J Brothers and check, 4,300 deposited. J Brothers and check, 4,300 deposited. Now to premium paid as per standing instructions, 2,500 withdrawal. Okay, this has not been recorded. So this is one reason why there is a difference. Now what are standing instructions? Usually businesses will have some expenses which will be paid monthly. So what businesses do is they give a standing instruction to the bank. They authorize the bank to make payments on their behalf every month to that particular account. Consider it something like our auto pay. Now the bank has acted as per the standing instruction and has made the payment, but that has not been recorded in our cash book. So that is one reason for difference. Next we have bank charges. Usually banks charge a fee for maintaining accounts, and that will automatically get deducted from our passbook, but it won't. But most times businesses are alerted a bit later on, so that is why there is a delay, or they do not record it. They do not record it in the cash book. So that is also another reason for difference. Next we have by interest collected on government securities. Okay, so whatever interest that the company has received on their investments has directly been credited into the bank account. But the account holders, they are not aware that this amount has come into their account. That is why they have not recorded it in the cash book. And that's the reason there is a difference in the balances. Now let's look at the cash book and see if there are any more items which are not mentioned in the passbook. Okay. I don't see any Babu and Company payment for January 25th. Okay, so that means we must have prepared a check and issued it to our customer, but our customer has not yet encashed the check. So our balance is incorrect. Then on 22nd Jan, no, there's no 22nd Jan here, and 31st, okay. So we have received 2 checks on 22nd Jan, one on 22nd Jan and another on 31st Jan. In our books, we have recorded it, but the amount has not yet been deposited in our bank account. So this is also another reason why there is a difference between our passbook and our cash book. Let's look at further reasons for differences in the passbook and cash book. Okay. So the first difference is difference due to timing. So checks have been deposited but not yet encashed. Checks have been issued but not yet been presented. See, like in this case, M. Mohan and Company and N. Nandi and Sons, we have received the check and it has not yet been deposited. So that amount has not been reflected in our bank account, but we have recorded it in our cash book. And similarly, the check on January 25th of B. Babu and Company worth 7,800. In our books, we have recorded it as presented, but it has not yet been. In our books, we have issued the check, but this check has not yet been presented, and hence that amount has not been deducted. So that is the difference in timing. The next reason for difference is transactions which are recorded by the bank but not known to the account holder. Like I told you, there are certain expenses that the bank will charge, which the account holder won't know immediately. Later on, they'll get to know and they will record it. But that interim period will cause the difference. So you can see all the items here. Interest received, bank charges, payments on standing instructions, direct payments by the bank. So sometimes customers, what they do is they directly deposit money into the bank account without intimating the account holder. So money gets credited, but the account holder doesn't know. Any interest or dividend collected by the bank will be recorded. Then if any bill is presented for payment to the bank, that will also reflect. Any bill which has been dishonored, even that will get reflected. That will directly be recorded in the passbook, and the account holder may not know of it. See in this example, in this passbook and cash book, here we had, bank charges, premium paid as per standing instruction, and interest collected on government securities. These transactions have all happened in the bank and the account holder is not made aware of it. That is why there is a discrepancy. Now, the third kind of error is error by omissions. After all, who is preparing the account? It is a human being. There is always a chance for human error. There could be an oversight on part of the accountant and he may forget to record transactions, and that's how they may get completely omitted. Now, remember this, okay? This is, if you don't want to get confused in your bank reconciliation statement, this is your mantra, this is your foundation. Bank account, your passbook, credit balance means favorable incomes. But in your cash book, in our accounts, in our bank account, a debit will be favorable. It is the reverse in the cash book and passbook. So please remember this. Okay. Now, bank reconciliation statement we have understood. We saw the passbook and the cash book, and then we saw the differences between the two. So now we can prepare the bank reconciliation statement taking either the cash balance in the beginning or the passbook balance in the beginning. So the aim is to reconcile both balances. See, in this case, balance as per cash book is taken as the starting point. Balance as per the cash book. Then whatever transactions which need to be added or which need to be subtracted are done, and we end up with the balance as per the passbook. Similarly, we can start with our passbook. We can take the passbook balance in the beginning, then whatever discrepancies are there, reconcile those differences and end up with the cash book balance. So now we have seen what all differences are there. How do we reconcile these differences? It is very simple, very simple. You just need to apply a little bit of common sense to each transaction. You need to think in a little analytical way. We will do one example now. And in fact, in this bank reconciliation series, I am going to be solving multiple problems. So keep watching all of those, and as and when we come across transactions, you will keep getting all your concepts cleared. I always believe in clearing concepts through examples, through practical examples. You will understand the logic and it will be very simple. But please note, you need to practice, okay? You need to practice. In this bank reconciliation statement, like you saw, you can start with your cash book, you can start with your passbook. If you're starting with cash book, you will have one logic. But if you're starting with the passbook, it will be the reverse logic of where we were starting with the cash balance. Okay. Like I told you, these 4 rules, we are going to have 4 cases. Okay. In case 1, where we are having a favorable cash book balance. Case 2, where we are having favorable passbook balance. Case 3, we are having unfavorable cash book balance, and case 4, we are having unfavorable passbook balance. Unfavorable passbook balance basically means overdraft. Okay, don't worry, we will do the examples. Let's start with our first example. Case 1, when our starting balance is favorable as per the cash book. That means our cash book is having a debit balance. Okay, so now let me just write down the formats in the books of so and so. Bank reconciliation statement as on 30th June 2015. Okay, so this is how you make your bank reconciliation statement in the books of. So this is a statement which is prepared on a date. It's not a periodic statement. Let's read the question. Bank column of the cash book showed a debit balance of 49,000 on 30th June. Okay, so our starting cash book balance has been given 49,000 and it's a debit balance, that means it's favorable. And our passbook showed a credit balance. Credit balance means, okay, our passbook balance is also favorable of 37,300. So there is a discrepancy between the two. Entries in the cash book and passbook were compared and the following differences were noticed. Okay. Checks of Sham rupees 9,000. Okay, before we read the first discrepancy, let's note down the opening balance. So we will start with our cash book. Okay, usually that is a bit more easier. In balance as per cash book, debit means favorable. Okay, so I will write it in my plus column, 49,000. Now I'm going to write one subheading called add and another subheading called less. So under add, I will include all those transactions which I need to add to my cash book balances, and under less, I will include all those transactions wherein I have to subtract from my balance as per cash book. Let's see the first transaction. Checks from Sham 9,000 and Mohan 15,000 were deposited but not collected up to 30th June 2015. Okay. These checks were deposited but were not collected. So what does that mean? These checks were deposited but were not collected up to 30th June. So what this means is we have received a check. Okay, so in our cash book we have recorded that we have received this 9,000 and this 15,000. But in my passbook it has not yet been reflected. The check has not yet been cleared. It has not yet been collected by the bank. These two checks were not yet collected by the bank. That means my cash book balance is showing more 15,000 plus 9,000, 24,000. My cash book balance is 24,000 rupees more than my actual passbook balance. Okay, I have recorded that I have received the money, but the bank has not yet collected those checks. So that means my cash book balance is more, right? So to equalize, I have to deduct the amount. That is what I will do. In my less column, I will write checks deposited but not yet collected. Sham 9,000, Mohan 15,000. So in my less column, I will write 24,000. Now, let's see the next transaction. Ramesh, a debtor, deposited a check of 8,000 rupees directly into the bank. Okay, so a check has directly been deposited in the bank and this transaction has not been recorded in our cash book. What does a deposit mean? It means money is coming in. So that means our cash book is less by 8,000 rupees. Now to equalize our cash book and passbook, I have to raise up, no? So I have to add this amount. I have to add 8,000 rupees to my cash balance. This has been recorded in my passbook, but in my cash book I have not received, because I don't know that this customer Ramesh has directly deposited the check in the bank and the check has also been cleared. I do not know. I have come to know now. So I will add, okay, I will add rupees 8,000 to my cash balance because my cash balance is less by 8,000 rupees. Check directly deposited by Ramesh. 8,000. Let's see our next transaction. Bank allowed an interest of 500 rupees. Okay. So what does this mean? Bank allowed an interest. That means bank has given us interest of 500 rupees. Usually savings bank account or I'm not sure about current accounts, but saving bank's account we get interest. I think so so even here the bank has given the account holder interest of rupees 500. That means our bank balance is 500 rupees more than our cash balance. To tally the two, I have to raise my cash balance. My passbook balance is 500 rupees more and my cash book balance is 500 rupees less. So to raise it, I have to come up. So I have to add a balance. I have to add 500 rupees. Okay. Let me add here bank interest. Let's see the next transaction. Checks for rupees 10,000 issued to Radhe Shyam, not presented for payment. Okay. So a check for 10,000 rupees has been issued, but it has not been presented for payment. What does this mean? See, I, the account holder, I've written a check for 10,000 rupees, but for some reason I could not go and present the check to whoever I was supposed to give. So what does that mean? Still 10,000 rupees is with me. I've just that check I have written the check, but I have not yet presented it for payment. So what and what did my accountant do? Since I have written a check, he assumed that I have made off payment and he deducted 10,000 rupees from my cash book. So my cash balance is low. But actually what happened? My 10,000 rupees is still in the bank. Okay, 10,000 rupees is still in the bank. That check has not been presented. I have wrongly deducted it from my cash book because I still didn't present that check. If I had presented that check, then correctly 10,000 rupees would get deducted from my bank account, but that did not happen. So what do I do now? My cash book balance is less by 10,000 rupees. So I have to add it up. Okay, I have to add 10,000 rupees. I will write check issued but not presented for payment. $10,000. You got it. See, check for 10,000 has been issued to Radhe Shyam, but I did not present that check to Radhe Shyam. In my cash book, so now my cash book balance, so now this is my cash book and this is my passbook. My cash book balance is lesser and my passbook balance is more. In my cash book, my accountant has assumed that 10,000 has been paid off. But I did not present that check to Radhe Shyam. That amount has not been deducted from my passbook. So that means my passbook is still here. Now if I want to equalize the two, my cash book balance has to come up, no? So I will add. Okay. I will add 10,000 rupees. Now let's go to the next point. Bank debited the account by 6,000 being insurance premium paid as per standing instructions. Okay. Now, as per standing instructions, Our bank has paid on our behalf our insurance premium. My accountant doesn't know. I got the SMS, but I forgot to tell my accountant, so he doesn't know. Insurance premium has been deducted from our passbook. So to compensate it, what should be done in the cash book? It's an expense, right? It needs to be deducted from our cash book as well. Our passbook balance. See, this is my passbook and my cash book. From my passbook, 6,000 has been deducted as per my standing instruction that I have given to the bank. Now, this I don't know in my cash book. So, if I want to equalize the two, what do? I'll have to bring my cash book balance down. I'll have to bring my cash book balance down to equalize it. Insurance premium paid as per standing instructions by bank. Rupees 6,000. Let's see the next transaction. Bank debited the account by 100 rupees being bank charges. Okay. Same concept like insurance. The bank has charged us 100 rupees for maintaining our account. The banks usually charge fees from account holders. So this fee has been directly debited from our passbook, from our bank account. Now, our bank account balance is less by 100 rupees, but our passbook balance is more by 100 rupees. So if I want to equalize the two, I have to deduct 100 rupees. Same concept like the insurance. Bank less by 100 rupees because of bank charges. Now if I want to equalize the two, what do? I have to deduct 100 rupees. I have to less 100 rupees from my cash book to equalize. Bank charges rupees 100. Okay. Okay, these are all the transactions. Now I have to end up with this balance 37,400. Let's see. Let's do the computation and let me write here balance as per passbook. Okay, so see, I'm starting out with 49,000 plus 8,000 plus 500 plus 10,000 minus 24,000 minus 6,000 minus 100. So 37,400 is my balance. 37,400. And what was the balance given in the question? 37,400. Okay. So we have reconciled the. Okay. So now we have reconciled our cash book balance with our passbook balance. In the question only we got our passbook balance, and through the steps, through these given transactions and all the reconciliations that I have made, I have ended up with a balance of 37,400. That means my working is correct. Isn't it a very elegant way? You will know that whether your working is correct or no, because you have to end up with that balance as given in the question. And that's how we have reconciled our cash book balance with our passbook balance. So all you need is a little bit of common sense. You need to keep reasoning out. Okay, so if this has happened, how will it impact my account? If in that account amount is more, so then what will the effect be in the other account? So just if you apply these logics, you will be able to sail through bank reconciliation statement. It is very simple. You don't have to ratify anything. You just have to apply simple logic and common sense. That's all. So today in this video, we saw what a bank reconciliation statement is, why do we need it, and what are the reasons for the differences. And we solved one question wherein we reconciled a cash book balance with a passbook balance. In the upcoming videos, I'll be solving more questions for each and every case. That's all for today's video. See you in the next one.